Hi everyone, this is Jason Barrett of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. We've had him on. We try to have him on every quarter. Nolan Watson, CEO of Sandstorm Gold. He also was one of the first employees at Silver Wheaton, so we're excited to have him back on to talk about his company and the gold market. Thank you for joining us again, Nolan.
Well, thanks, guys.
All right, Nolan, I want to start off the podcast by talking about the general gold market and try to get a review from you for the 2014 year as it's getting close to the end. And for the most part, the precious metal market has been a real bad situation price-wise for a lot of investors and a lot of juniors and miners as well. So I want to get your current take on the gold market. Why do you believe gold continues to go down despite the high demand from the East?
Yeah, it certainly has been a challenging year for the gold market, there's no question. And I think what you're seeing is liquidation out of the United States, out of institutional investors there. And there has been a significant increase in the purchasing of gold elsewhere in the world, but it's not been enough to offset the liquidation that's been happening. And certainly the main theme in the U.S. that you hear every time you turn on CNBC or any other news broadcasts, people are talking about being worried about deflation. And although I don't think that those are things that people have to be concerned about, given what central banks are likely to be doing over the next couple of years, it certainly does make it for a hard tape for the gold price. And so in this environment, there are a lot of gold companies shutting down, a lot of gold companies going insolvent. Balance sheets of major companies are becoming a concern. You've got companies like Kinross that used to have $17 billion market caps, now have closer to $3 billion market caps. And so it's a very challenging environment, there's no question.
Yeah, there's been a lot of misallocation of capital, Nolan. There's been a lot of mining companies that have done really bad acquisitions and and mergers and things like that at the top of the market. One thing you brought up about deflation, and I don't think that people on Wall Street understand this because most of them are so myopic and short-term they don't understand financial history, is that physical gold is actually a really good deflation hedge too. It's the only asset when you buy it that doesn't have any counterparty risk. So, you go back through financial history and you look during one of the only real deflationary periods during the modern era, which was after the 1929 crash. Physical gold did very, very well before FDR, confiscated gold and forced people back into dollars and devalued the dollar against gold. But I don't think your point there is well taken. I don't think modern Keynesian central bankers or neo-Keynesian or whatever they want to call themselves now, I don't think they will allow asset price deflation or any type of pure deflation going on for more than a short amount of time.
Yeah, the fact is that they can't afford to do it. The debt to GDP levels of governments around the world and of individuals around the world is even higher today than it was back in 2007 before the crash, and higher today than 2008. And with a world as indebted as ours is, you cannot afford to allow deflation to take hold, or there will be financial collapse, and it's just a risk that they can't take. So there will be inflation because they will make sure there is.
Well, deflation, Nolan, is immediate collapse, right? So they would rather just postpone any collapse or any problems as long as possible. So they don't care what other bubbles or any other misallocations of capital, as someone who studies the free market like you, me, or Mo might understand over the long term. They don't really care about that because, most of them are tied to an election cycle for politicians or things like that. They only care about what happens, this month or next year or 2 years from now at most.
Absolutely.
Now, Nolan,
Absolutely, I'm just completely agreeing with you.
Oh, okay. Now, Nolan, I want to go to the micro part of the gold market. We talked about the demand side. I want to talk about the supply side. The juniors have just gotten decimated here at this point. Sandstorm Gold is holding a lot of cash. There's obviously, we talked about this before, a lot of opportunities for Sandstorm Gold out there. But what type of debt and equity is available for some of these juniors? We've started to see some small fundraisings recently. I think a Chinese company just put $81 million Canadian into Pretium. Are we starting to see signs of the bottom, or do you think there's going to be further capitulation to go?
Well, I think there's going to be continued pain because the despite the fact that we're starting to see signs of life in potential equity financing through strategics or through potential private equity investors, or even the odd institutional investor who's been sitting on a pile of cash for a long period of time is now beginning to deploy it, there's still a far greater demand and need for cash than is available, even if there are small signs of life in the equity market. So that certainly means that for the companies that don't get that cash, there will be more pain, there will be more insolvencies, there will be more layoffs, there will be a continued reduction in total exploration spend around the world. But certainly there are some very good projects out there still that are cash-starved and that are worthy of that cash, and you are going to see some capital be allocated to them. And Sandstorm, with the balance sheet that we have, we're in a position to be one of those capital providers, and we're out there talking to companies and working on a few small investments as we speak.
And you guys have done a good job, I think, of weathering the storm for the past few years since the gold and silver has gone down and stabilized. I think a lot of the other junior miners and other mining companies were betting on higher and higher gold prices to increase their bottom line. And that's unfortunate because a lot of great mines out there had to go into care and maintenance or just go offline. So hopefully in 2015, the management will learn their lesson and try not to do it again, but I doubt it, because history has told us that they continue to make the same mistake. Do you agree?
I appreciate that, and history has proven us that people will continue to make the same mistake. And I guess part of my particular philosophy is that despite the fact that I have a view on gold prices and have an idea as to where I think they will go, my job as a CEO is to ensure that our company is well positioned irrespective of the direction it goes. So at Sandstorm, we're trying to continue to acquire smart royalties and small streams to broaden the portfolio base, to have more assets coming out of this downturn in the market than we had going into it, so that the next cycle up, we've got even more value in the company than before. And conversely, if the price does continue to lag, that we are smart with our balance sheet, that we're selective with the things that we buy, and that we'll continue to ensure that we're in a net cash position and have a strong balance sheet no matter how long this lasts. So my goal as CEO is, irrespective of how things go, to do smart transactions and keep a strong balance sheet.
Yeah, you guys are generating free cash flow still, unlike pretty much any other regular mining company out there. Now, obviously, you don't have as many royalties and streams online as some of your larger peer group like Franco-Nevada, Royal Gold, or Silver Wheaton. But, I mean, given I think Sandstorm Gold was started in 2009, the amount of stuff you've accomplished just in 2009, how big the portfolio is, I think going from, one asset with Luna Gold and taking that and going to, 14 cash flow assets now online is pretty impressive given the time period.
Yeah, thanks very much.
Now, our listeners have sent in some questions. They've sent me some questions. How much free cash flow right now are you guys generating for our listeners out there who are curious about potentially looking at the company now and making an investment?
Yeah, we're currently generating around $35 million a year of free cash flow.
And that's got to be one of the lowest free cash flow multiples, Nolan, of any company on any exchange I've looked at. I mean, you guys are almost at a 10 times free cash flow multiple. I think at one point it was actually below 8 on the free cash flow multiples there. And it's unheard of to find companies, in any business model, in any category with that low of free cash flow multiple. And when I ask other people, besides not people in the gold industry, but regular value investors, why they won't buy your stock because of how low the free cash flow multiple is, they tell me they're worried about your counterparty risks. So I think that's smart that you're looking to diversify to reduce your counterparty risk.
Yeah, so today we have those 14 cash flowing assets, and we have another 31 streams and royalties that are at various stages of whether they be development or exploration. And we're just going to continue to diversify our counterparty risk. We're going to diversify our country risk. And we're just going to continue growing the portfolio and diversifying that type of risk. I would say today, what most people don't realize in our company is that nearly 40% of our cash flow is now coming from a portfolio of royalties that we have, and the counterparties of those royalties are companies like AngloGold Ashanti and Newmont and Glencore and other majors in the industry. And so our counterparties on that 40% of our cash flow is as good or better than the Franco-Nevadas of the world and the Silver Wheatons of the world. And on the streaming side of things, the vast majority of our counterparties are actually producing gold still at this day less than what the gold price is. And so we've only got one or two things that we're concerned about. One of those is Luna, and I think those concerns are well documented. And outside of Luna, I think we're looking pretty good.
Now, Nolan, ever since you did your conference call, I noticed one of the things that you said that you guys have decided to take a breather for the next quarter or so due to the low gold prices in terms of making streams or royalties. Now, do you have a target gold price that gold has to go up to in order for you to hit the gas pedal again and start making deals, or are you just going to wait and get a feel of the market and then make a decision from there?
Yeah, well, I guess to clarify that position, I would classify deals broadly into two categories, and one would be large deals that would be streams on things that are about to go into production where they would go and start building the mine now. I think that those deals are risky in this market because there's not a lot of equity capital available, and those deals are also large, so they would use up a large portion of our cash very quickly for risky things. And so in this market right now, we're taking a bit of a break from those types of transactions, and we're not doing them. Having said that, what we are very active doing in this market is trying to tie down as many small royalties and rights of first refusal to do stream or royalty financings at some point in the future. So we're trying to broaden our portfolio. We're trying to create relationships with companies that have interesting or exciting assets and do it with small purchase prices so that we still have a strong balance sheet so that we don't use our capital quickly. And if this downturn lasts longer than everyone thinks it's going to last, we're still going to be in a strong position from a balance sheet perspective for a prolonged period of time. So we are as busy or more busy than we've ever been trying to buy things, but they're of a smaller nature now than they were a year ago.
Yeah, and you're starting to see some of your assets, some potential acquirers interested in them. I think Mutiny Gold was bought out, right, by a larger gold mining company in Australia. So that mine will eventually be put probably into production when the gold price returns. Whereas, if it was stayed with the Mutiny Gold as a smaller gold company, it might not have. So you're starting to see quality assets like that, and maybe Luna, which is a quality asset, which does have a lot of optionality for a larger gold mining company down the road. I think there's a high likelihood that Luna is taken out, I don't know exactly when, but in the near future by a primary gold miner that wants to expand its production, because that mining plan is still valid, right, when the gold price is higher.
That's exactly right. Our philosophy of our business at this point in time is find highly attractive deals on assets that are in the hands of smaller companies maybe today, but are that of sufficient quality that they will be bought by larger companies tomorrow, so that we'll end up with a good deal and a strong counterparty. Whereas the larger streaming and royalty companies, they have to pay such high prices for large deals to get those large counterparties that they end up making effectively a return that's around 2 or 3% on average. And so we're trying to get those high return deals but still end up with the better counterparty. So 3 of our partners in the last 24 months have been bought out or had their properties JV'd with large multi-billion-dollar companies or companies in the hundreds of millions of dollars. That's exactly what we're looking for.
Very, very, very good, Nolan. And how has your checklist then changed from making an investment post Colossus Minerals and since Sandstorm Gold bought metals and energy, and there were some streams in metals and energy that there was a number of them that didn't work out. How have you learned from your mistakes then the last couple of years with some of those deals not working out how you thought they would?
Yeah, I think that's well documented. There's really two broad ways that we've approached changes. One is on the technical side of things. So we've hired up an incredibly good internal technical team, and the geologists and engineers that we have now full-time dedicated in-house are of world-class caliber. But the second thing that we're looking for is we have developed a system on a holistic risk approach. So rather than looking at every risk at an asset independently and deciding whether or not that is a fatal flaw, we've developed a series of decision-making steps that, although we're not going to spill our secret sauce publicly as to how we evaluate these things, we create valuation models that look at various scenarios of various risk factors coming true and various combinations of those small risk factors coming true. and we have therefore a much higher hurdle rate of actually getting into a project. So we're looking at projects that are not that risky compared to the types of things that we would look at before.
Now, Nolan, I want to go off track here and talk about one of your competitors, which is Osisko Gold Royalty. And you probably heard they recently did a merger with Virginia Mines, which I thought was a little odd because they're a gold royalty and they just merged with a mining company. I just want to get your thoughts on that merger. And do you see yourself doing that type of deal somewhere down the road as an opportunity present itself with Sandstorm Gold?
Although we're not afraid of acquisitions and mergers, it's not something that we were entertaining. And I guess the reason I'll take a step back and actually semi-defend them in the sense that the main asset that Virginia owned is a royalty on a Goldcorp property called Eleanor, and it's a good mine and it's got good exploration upside, and that's really the reason that Osisko bought Virginia. The one thing that I think is very different from what Sandstorm is doing is that the combined Osisko-Virginia entity is keeping a number of exploration geologists on staff with the view of spending a portion of their cash flow every year on exploration, grassroots exploration themselves. So they're not just a royalty company, they're an exploration/royalty company. And so a portion of their cash flow from the royalties is going to be going into exploration, whereas we take a bit of a different approach at Sandstorm, whereby we're just a streaming and royalty company, and every time we deploy cash, it's to buy a stream or a royalty, and we won't be doing any exploration ourselves.
Oh, okay. So that's like an Almaden Minerals or Eurasian Minerals type of thing where they use the cash flow from the royalty to look for explorations, and then they do stock spin-offs and things like that. That's getting a little too fancy there. It's kind of getting away from the core business model of just royalties and streams then. Now, Nolan,
that's what I think. Having said that, they do have a couple of good royalties that will generate a lot more cash flow than they'll be spending on exploration, but still I agree with you.
Now, Nolan, you gave a speech early in 2014, I think. I watched it on your website. You were talking about how the future of the mining industry and the resource industry is the financing instead of as much bank debt and the risk of miners, taking on too much debt or diluting the shareholders with mass amounts of equity as royalty and streaming companies. Why aren't there already a dozen or more royalty and streaming companies then, in your opinion?
Well, I would say two reasons. One is it's actually very hard to start one successfully because you require a large bucket of capital and you require a number of deals, and it's surprisingly hard. We've seen a number of private equity competitors try to start up and fail in the process. But every now and then you do see a company do it successfully. And then so reason number two, the reason you don't see so many, even though some do it successfully, is that the industry is fairly good at consolidating itself. So if you think back to 2008 when we were just looking at starting to launch Sandstorm, you had Silver Wheaton, Royal Gold, Franco-Nevada. You had Gold Wheaton, which got bought out. You had IRC, which got bought out. You had Silverstone, which got bought out. And then you had Osisko create itself, but then they bought Virginia. And so the industry just keeps buying the companies in the industry. Their premier royalties was spun out, and we bought them as Sandstorm. And so the industry does a fairly good job of keeping a relatively few number of companies, and I don't want to call it an oligopoly, but it's fairly close to one.
Well, it seems like the barrier to entry is the biggest problem for people that want to start up a royalty and streaming company. So there's less competition, which is good for you guys, right?
Absolutely.
Okay, great. So I want to, if you don't mind, there's a question I wanted to ask you at the beginning of the podcast, and it relates to gold and digital currency. Now, the rise of digital currencies has started to accelerate in the past few years with Bitcoin, Litecoin, and lots of other digital currencies out there. And there's also a lot of other people trying to back their digital currency with gold. I want to get your thoughts on that, and do you think this will pick up any momentum for the long term?
Yeah, I am a very big believer that with the combination of technology that is available today with digital and cryptocurrencies combined with mobile technologies, etc., that when you combine those with the concept of what gold is, that we have the potential to make the best currency that the world has ever seen, and certainly the most stable one. We're on the precipice, I believe, of being the first generation that is able to see a currency that is actually backed by something with value that is also easy to transact with and can be a medium of exchange. And so I would not be surprised if in the next few years we see a currency that is effectively where you can have gold in a vault but spend it anywhere you want easily and efficiently. And I don't see it, when I look at gold, I don't see it as something that should be backing government fiat currencies. And I wasn't even that big of a supporter of the Swiss referendum. I don't think that we should look at gold as trying to force governments to back their currencies with gold. I think we should look at gold for what it is, which is its own currency, separate from government fiat currencies, and is capable of just being an alternative to them. And I believe that we're on the precipice of that happening, and I'm pretty excited about it.
Yeah, I would like to see Nolan money. One of the best things that was about gold and silver was you didn't always have to use gold and silver. You used to have a receipt for it. So, if you had a silver certificate or a gold certificate, you could do that as a paper, and then if you wanted your metal, you can go to the goldsmith or the banker or wherever, and you could demand your metal. And I think that's where digital currencies and virtual currencies are headed, where these virtual currencies, they're a fixed amount, and they're going to keep track of the metal maybe in the vault like a receipt. And I think that's pretty good, because then people don't have to carry around paper silver certificates or paper gold certificates like they did in the past. They can keep their receipts, their certificates then for their metal on their smartphone or something like that.
Yeah, if you think of something that has the safety, security, and value proposition that gold does, combined with the convenience of being able to spend electronic money, I think that's where the world's going to head with gold.
Yeah, I would really like to see that. Hopefully the government doesn't try to send anyone to prison like the original Eagle guy or the Liberty Reserve or things like that. But I know I think there's Bit Reserve and a couple other companies at least trying this right now out in the marketplace that are at least like they're startups right now. Well,
there are, and there will be more to come.
Well, Nolan, I have a couple more questions for you, and Mo, I think, has one or two more questions, too. My last couple questions, it has to do with silver Wheaton. We saw silver Wheaton during the 2007-2008 crash. It was a really good stock at one point, growth stock. I think it was at $20 a share, and it got clobbered, I believe, down at $3. It was just an absolute massacre. And if you look at the chart pattern from that and the chart pattern of what happened to Sandstorm Gold, we've just seen a very similar type of thing. There were articles coming out in 2008 saying Silver Wheaton was going to go bankrupt. Their counterparty risk was bad. I'm sure this sounds familiar to you and our listeners who are going to listen to this podcast. Do you see a lot of similarities then between in terms of what's going on operationally at your company and what happened to Silver Wheaton in 2008 and how Silver Wheaton ultimately recovered from all this to become, very well diversified, solid cash flow, large company?
Yeah, certainly when you're at the bottom of a cycle and investors are losing money on all of the other companies that they're investing in, they sort of paint everything with a negative brush, even if it doesn't deserve so. So if you look at Silver Wheaton back at the end of 2008, beginning in 2009, when they went down to $3 a share, people were saying, well, they could violate their debt covenants, and that could cause them problems. And I don't think people realized that they were cash flowing hundreds of millions of dollars, and their debt was only a few $100 million, and that even if they had violated their debt covenants, they still had enough cash flow to actually pay off their debt, and it really wasn't an issue. So I actually bought Silver Wheaton shares at $3. So
smart man.
Well, I wasn't that smart when I sold them. I sold them too soon. I'm a big believer that people need to be patient in markets like these, and certainly there is an analogy that Sandstorm has dropped to those amounts, but I would say that we're even in a better position today than Silver Wheaton was then because we have no debt. There is no chance that we're going to go insolvent, and the worst case scenario is that things like Colossus happen, which is where the company goes insolvent, and guess what? We are the senior secured entity or the primary secured entity in most situations. And so Colossus, even though it was a challenge, and I think most people don't realize that we actually own 49% of Colossus's parent company now, and we still have our debt secured at the Brazilian subsidiary level. So that's maybe a bad example, but we end up getting more assets at the downturn because of the way we structured our contracts if things do go poorly. So the value doesn't disappear, and it's there and ready to reappear when the cycle turns around. So in terms of risk, I would consider ourselves much lower risk than just about every other mining operating company out there.
Nolan, before we let you go, myself and the audience would like to get your outlook for 2015 on the gold market and Sandstorm Gold as well. So if you don't mind, what are your thoughts for 2015?
Well, I think I'll start with Sandstorm. So irrespective of what the gold price does, for 2015, our goal is to do a number of really smart transactions where we get not only royalties, but we get the right to first refusal to do streams of royalties on those assets in the future as they grow and mature and the cycle turns around. So our goal is to maintain a strong balance sheet but continue to grow. With respect to the actual gold price, 2015 I think is going to be a fairly volatile year. I think there are going to be periods of time where we test the new lows in the gold price, and I think that we're going to have days like we have today where the gold price goes up substantially, and it's going to be a lot of that in 2015. I am not expecting the market to come soaring back at the beginning of 2015. I think that's either a later 2015 or into 2016 type event. I certainly do believe that the market for gold will come back. I believe that the amount of gold that is being simply on a purely supply-demand basis, the amount of gold that's being bought out of Asia and the Middle East, all we need is net liquidation of gold in the U.S. to cease, and the price of gold is going to go up just purely based on fundamentals. Irrespective of the inflation, deflation narrative, there's enough gold being bought for the price to go up as long as gold stops being liquidated out of the U.S. So I am bullish on the price. I just don't think it's going to be in the next 6 months that we see the benefits of that.
That's interesting, yeah, and I think demand is growing faster, and obviously, Nolan, there's supply concerns. If the metals prices stay at these levels or go lower, there's going to be miners either going out of business and bankruptcy or shutting down the mine. I think that there's, in my opinion at least, looking at the market for miners, I don't know how much more cost cutting they can do. I mean, they've high graded mines. There's not debt or equity available. I just don't see that much more ways they can cut costs without actually shutting down the mines and or going bankrupt.
Yeah, and certainly in this environment, no one is building new mines.
Now, Nolan, my final question has to do with your free cash flow and your cash on hand. In a scenario where maybe the oil price keeps going lower, the dollar gets stronger, maybe the gold price does go higher, but the mining shares keep dropping. If Sandstorm Gold were to drop to maybe $1 share, maybe like a total capitulation moment, and you guys are still generating, a good amount of operational cash, a good amount of free cash flow, would you consider a share buyback at this point, or are you mostly focused on growth?
We absolutely would consider share buyback, and we would start buying back our shares well before they hit $1.
Okay, Nolan, well, thank you for your time, and if people want to find out more about Sandstorm Gold, where can they go? And if you don't mind, tell our audience your ticker symbol for your company.
So our ticker symbol in New York is SAND, S-A-N-D, and on the TSX, our ticker symbol is SSL. And they can visit our website at sandstormltd.com.
Okay, Nolan, well, thank you for your time, and hopefully you can come back again soon.
Well, thanks very much, gentlemen.